Hello guys, welcome to the Train Parrot. Inflation rate keeps coming down, interest rates are finally pausing, at least for now. General markets are running incredibly bullish. DXY is finally dumping, but we still broke this bullish structure in a bearish way. In this video, we're gonna find out what's going on, why everything is so bearish in crypto, while at the same time, all the traditional assets are going up. So I'm gonna try to answer that from a macro perspective and try to see what's my forecast for the medium and long term for Bitcoin, while at the same time, we're gonna look into the liquidity to try to spot those opportunities for bounces that everybody is waiting for. Don't worry, we're gonna cover the rate of longs and shorts, what's going on with the open interest. Everybody's talking about it on Twitter, and you should be definitely aware of the implications. The liquidity is quickly moving away from 25K, so we have to know where are the whales placing their bets. Guys, if you like this content, make sure that you're subscribed to the channel. I'm publishing videos almost every day now about the market. And I really want to know if this information is useful for you. The only way I can know that is if you hit the like, subscribe to the channel, and in order to really give a boost to the channel, write down a comment. Doesn't matter what you write, any comment is going to help. Let's get into the content. So inflation rate is coming down, check. Interest rates, they just paused. Unfortunately, the expectation is that the interest rates should increase in total to 5.6. That level of interest puts a lot of stress in risk-on assets. And together with the US, specifically the SEC, becoming so against crypto as an industry, in my opinion, is making all the investors to pull out from crypto and go all in traditional markets. Why not? The conditions seem to indicate for most of the traders that this is the right time to go bullish. Unfortunately for crypto, the situation is different because of all the regulations. They are not clear. Luckily for us, the SEC is being put at stress by the Congress to try to get them to either remove Gary Gensler or to speed up their process of putting out proper regulation for the crypto industry. The DXY is beautiful for trading. This is the perfect scenario of the DXY to have the most bullish move in the crypto assets. We broke the support on my level of 102.5 and it's heading down back to 101. In one of my previous videos, I covered this hidden bearish divergence and it's playing out perfectly well. Right at the week, we mentioned the potential hidden divergence was precisely the top and we started heading back down. The Nasdaq, same as the S&P, seems to be all in right now in the market, thanks to the FOMC meeting yesterday, not increasing the rates. And if you're wondering who the heck is selling Bitcoin right now, James is pointing out, as always with FUD or panic sellers, Bitcoin short-term holders sold in droves again. Second highest amount this year, just behind SVB collapse. The collapse was around here when Bitcoin was 19K, and the amount of short-term sellers have reached the same amount. If you missed yesterday's FOMC meeting, here's a very good summary from Dr. Profit. No rate hike increase this month, rate cuts are unlikely in 2023, and the Fed goal remains 2% inflation. The Fed signals possible rate increase this year, 2 rate hikes with 25 basis points expected by Fed this year. And I think that bit there kind of spooked the market, or at least the crypto market. In terms of price action, let's have a look at the daily. We have this falling wedge that started from around mid-April. This is a bullish structure. I'm using smart money concepts from Lux Algo. We have 2 patterns in place that are the most relevant right now. The first one is the falling wedge that broke to the downside, which has a target of around 24K. And then we have the head and shoulders, which by end of May was looking like it was going to invalidate, but actually was just a fake out and is still in play and is halfway through towards its final target, which is located around 23K. That coincides with this area of most volume. It also coincides with the equilibrium between the lowest level in the bear market and the highest level, the 50% level. It also coincides with this massive fair value gap around here. In terms of levels of support and resistance, we broke this daily level of support and now we have it as a resistance around 25.3. And yes, the CPR monthly broke the first level of support, which is also at 25.3. The next level of support during the month of June is going to be 23.6. And if that's broken, then 21.4. Let's look a little bit more in detail in the 15-minute chart. We can see that we have the point of control located at 25.9, and the area of most volume accumulated is between 26.1 to 25.5. And that is precisely the level of support that we just lost. We're going to have a look in just a minute at where the liquidity is actually aggregating at this precise moment. But we can confirm all this TA with data. I have a few orders that got filled last night at 25K by the dollar. I have orders below this price as well. But if we made a move to the upside, depending on the price action at that point, I might decide to sell around 25.5. If you've been watching my videos, I've been mentioning for a while that 24K and maybe a little bit below 24 is my target for this recent price move. I might be wrong, it's not financial advice. So if we go below 25, I'll be adding more. If we go to 25.5, I'll be selling my position. On Fibonacci levels, let's have a quick update because we did the same around here and it was very useful to know the levels that we were going to bounce. For example, in this last dump that we had in February, we bounced at the blue line. The blue line is located at 23.5, whereas the next green one is located at 24.6. We've been respecting these Fibonacci lines really accurately. I wouldn't be surprised that one of these lines is going to provide the final support for that push back to the upside. I'm also interested to know the liquidity to the upside, where is it located? And one of the reasons I'm being more cautious with this last trade, on one hand, I'm very bullish seeing that the DXY is selling, that the traditional markets are pumping. They're breaking out really in the weekly and different time frames. So that's very bullish for the stocks. What we need now is crypto to catch up with what's going on with the traditional markets. As you can see here, S&P and Nasdaq are going up. Finally, DXY going down and crypto still coming down. In terms of longs and shorts, we can see that the longs from mid-April until now, they keep spiking in an exponential way. Shorts, they were coming down, and yesterday they started building up their positions. And since both are increasing, let's have a look at the open interest. Since we started this bear market bullish rally, the open interest has been fluctuating between 90K to 120K, so a range of around 30K. I'm using here one of my indicators called Open Interest Filter that you can find for free. In TradingView, the longs from around 9th of June, they started being less. But since this is a ratio, it could mean two things. It might mean that there's less longs, or it could be that there is new shorts coming. We can see how the open interest went down up until the 11th of June and it started spiking like crazy. That is something that we can also visualize if we look directly into the levels of open interest. Only today, we have an increase of 7% in the total open interest. What is open interest? Open interest, think about it as the amount of positions open with leverage in the market. The higher this number, the more positions with leverage are open. They can be longs, they can be shorts. And what's going on with the alts? Oh my God, it's a bloodbath. During the full month, we can only see two coins in green, XRP and Lunar Classic. And if we move to the week, only CAS is up by 30%. And XRP is 5.6 down for the day. Trust Wallet token is up 8% for the day. And if we have a look at what's going on, all I can see is that they mentioned that you can do seamless cross-chain swaps with Trust Wallet. You can swap BTC to ETH, BNB to Doge, Trust Coin to AVAX, and many more. I haven't tried this and I wonder how much are the fees. If you have tried it already, let me know in the comments. And number 4, we have USDC. Of course, there's a lot of fear around USDT and the DPEG that we had in the morning. Things look a little bit better. We are still not at $1, but we are getting there. If you look at the long-term total free chart, we can see that we are in the last line in descent for total free. This is a make it or break it scenario. Of course, this is a weekly chart. It can take many weeks for the price to decide where to go. But what I'm fearing is to see the price breaking down this level of support provided by the top of 2018 bull run and then a break to lower levels. We're talking about 200 billion, 150 billion. Right now we are at 300 billion. We have to defend this level and hopefully make a higher high. But this structure here is not really looking very great, especially if we make a lower low and we break the support. If we stay in Bitcoin season and Bitcoin makes a massive move to the upside, many people are going to start dumping all their altcoins, and we might see eventually this breaking down, together with Bitcoin making a big move to the upside. Hopefully, what Bitcoin needs to do, and in the short term, number one is we need to break this trend line in the RSI weekly. We are below it, we're heading down, we have a support in my red line right here, and what I want to see is the RSI visiting this line and coming back up. So this line is located at 43, and I have drawn the TTP reverse RSI with levels 45 and 50. So this band here needs to hold, which is from 23.6 to 25.3. And we are right now pinching into this zone. The same goes for the EMA ribbon. We are doing something that we shouldn't be doing, or at least by the end of this week, we must close above the EMA ribbon. Closing below is going to undo all the work that we did around here to make the flip. The flip consists in the yellow lines to be on the top and the red to be on the bottom. Spending too much time around here is going to make it much difficult for the EMA ribbon to make the full twist. In the long-term chart, we are on support. This is the band that we must defend at all costs. It will be awesome, an entry at around 24, 23, and then bounce to the upside. But remember, we still have a 20K, a massive CME gap unfilled that starts from 21K to 20K. To the upside, we have one at almost 28, one at 29, and one at 34. And before we go and look into that data liquidity to confirm all the speculative TA that we've been doing throughout this video, OKX is my favorite exchange these days. I use it for trading with bots, and I use it for trading manually. It provides all the tools, and they're building really exciting features, including bots, signal bots that you're going to be able to even trade with webhooks from TradingView, grid bots, leverage bots. They have everything. And the product is really good and easy to use. But it's not all about the looks, it's also about having the less fees. And if you want to trade with less fees to maximize your profits, head down to OKX, go to create an account, and in the referral fee, write down Parrot. That's going to show you a kickback rate of 20%. That's how much you're going to be saving when trading with OKX. And of course, that's going to help support the channel. Right after the FOMC meeting, RSI 4 hour broke down. So I have updated the lines of RSI in the 1 hour and 4 hour, which I'm constantly keeping you updated on Twitter. Make sure that you're following me. My account handle is Trading Parrot, and I'll keep you posted with the current situation. The things are moving very quickly. We can see that the 1 hour is heading towards resistance. Whenever we cross it in this line, that is definitely captured my attention. And as I promised, liquidity, fair value gaps, we have a big chunk to the upside from 25.2 to 25.7. So that's reason number one for me to think that if I open a long, I want to take some profits. To the downside, the liquidity starts from 23.8. So if we make a move to 24 and we carry on, there's plenty of liquidity for a massive crash. If that happens, we definitely break the bullish structure. I started using material indicators. I really wanted a professional platform that can give me all the data about the orders in real time. I'm really impressed with the work of these guys. If you want to get a discount, have a look in the description, and you're going to save yourself a good amount if you use my link. So yesterday during the FOMC, we were seeing the orders at 25. That's why I entered my first order at 25. There is liquidity at 24, but I'm afraid that liquidity is being pulled out, not fully, but partially. This is the liquidity located from 24K accumulated in 1 month. There is a lot of liquidity as well at 21.6. And if we go longer term to 3 months, that gives you a very clear picture of where the liquidity is. The level of 22.6 has increased with the last move. The liquidity to the upside starts getting more prominent from 30K up to 33.4. And what is the delta on high block capital? Very important to know. Mostly the shorts are right now in danger of getting liquidated. There were massive amount of shorts opening from the time the price started dumping, and they are still holding on to their positions. And you know what happens when there's too many traders pointing to the same direction? They expose themselves and they become more easily targeted. All it takes here is a quick move towards the resistance or maybe towards the order block, which is 25.9, and all this liquidity from beginners gets taken. And that's the answer of why I'm thinking to unload my long as we move up towards those levels. I might be wrong, but I have the feeling that 24K is still on the table, so I want to just run it as a swing trade, get off, let it dump again, rinse and repeat. Guys, make sure you hit the like, subscribe to the channel, and the best thing that you can do to help this channel is to write down a comment before you go anywhere. Thank you so much for watching. I'll see you in the next one. Take care. Bye-bye.